Good evening. Ira Epstein, and here we are with your metal market wrap-up, and this is for December 5th, 2022. And the time right now, we're sitting here at, 6:40 p.m. Central Time. I've been working all day doing the last chapter on my finish-up of my outside day course. And as you know, we're ending now, tonight, at midnight Central Time. The Cyber Week sale comes to an end. Probably our biggest sale that I can recall. I mean, we've just had a lot of people step in. They want the courses. They realize that the price is going up about 33% tonight at midnight, and that's where they're going to be. That'll be our new retail pricing. You get a choice if you go in for a 1 year of my research. You can choose what you'd want from there. So just take a look. You can click up here, by the way, at any time. It's all explained. There'll be a link there. Take a look. As I said, Central Time, you won't be able to buy it because the computers will shut down and you just get an error that this has ended. And that's how it's going to work. So, as I said, I was working today, most of the day, in fact, working hard on finishing up the very last chapter of my outside day course. I keep changing things. I mean, so most people would be, it's only going to be 10 minutes, whatever it is. Yeah, well, you keep changing. It's not in the recording, the PowerPoints that I'm doing, and I got it down. So probably tomorrow I'll be finished with the course. Then we have to render it, get it set up on the computers, and it'll be out with any luck this week, and I'll be done with it. And I want to be done. It's occupied a lot of my time. So where are we with everything? Over the weekend, I wrote a report and I told clients, I said, you're not hearing it, but why not? Why can't the Fed go 75 basis points December 13th? The jobs data was super strong. We continue to see the economic reports each day that are coming out, such as a host of them this morning, that are showing strength still. We're not getting the weakness number, so the Fed can just say, hey, let's go 75 basis points. Let's see what that does. We then have until February, that's the meeting after this December 14th meeting, to see the impact of all this on the economy. Do I think it'll hurt the economy more? I don't. And the reason is there's still too much strength in November reports that we're getting out right now. So I'm by myself maybe on that thinking, but I don't see why it can't work. Then what you have to look at is you get down to some numbers, so you get a bit too cheap maybe in the dollar index, and it puts a little bit of pressure on the other markets that rallied. But you're still holding the 1,800 level in the gold. Copper market still trading near the 380 level. China's still letting go of what? They're going to come out, they claim on Wednesday, with 10 more parts to their plan to let the country come out of COVID. I think they're getting scared between the people, hearing that Apple wants to move out. There's just an awful lot, and it's time to do away with that draconian method. It doesn't work. They'll come out and tell you how many people are vaccinated, they can afford to do certain things, and I think that's realistic. I truly don't know what to make out of the energy market. The market started off $1 or $2 higher a barrel and then crashed later in the day. I don't think people have, including me, any idea yet what these caps are going to do or not do to the marketplace. Russia's selling oil under the caps, but what will they do with all the different countries that have signed on to it? Does it really matter? We don't buy. The G7 doesn't buy their oil, and the European Union's getting off of all this oil. So what's the difference? Let them sell it to India. Let them sell it to China. And they can keep buying it. What do we care? All right, let's take a look, if we could, though, at the gold market. And as you can see, the gold market is still staying over the 18-day average of closes, so the bias is up. When you look at the Fed gold, you had a huge outside day to the downside. To me, that's pretty important. We shouldn't take out this high for the next two sessions if the trend, or not even a trend, if the correction's going to continue on. Where might that go? Well, in order to break the uptrend, the last swing line low was 1750-290. You don't want to take that out if you're going to hold on to the uptrend. And where's the support? Here it comes in. The 18-day average of closes. By the way, you learn all this in my full charting course. So where did the market go today? Do you not see the first challenge of the 200-day average along with the Bollinger Band together? Come on. That's what you hear me talk about day after day when I do these If they come out, be it a 100-day or the 200, I'm always looking for it. I had one gentleman right over the weekend, Ira, the 100-day averages aren't working. I said, and I wrote back, and it's there on YouTube. I said, I don't think you're looking at enough charts. It does. It depends where it comes in. So if you just hone in on a few things, fine. But I look at probably every day 100 charts. So I have a fairly good feel as to what's going on with the marketplace. But this would have been a classic get me out of Dodge. In other words, when I say that, for those of you that are foreigners, that was a cowboy city, and you'd run out and you go, oh, the gangsters, the bad cowboys are coming in. I got to get out of Dodge. I'm going to get hurt. Well, you get up to these numbers, that's what you got to be worried about. When I look at where it could find support back here, you had gotten overbought. You're correcting it. You have not done damage to the chart yet. You got to take out 1750, 290 to do that. In the gold silver, you've come down so much, at some point you're going to get a correction again. And why is silver correcting? Let me think. How many days did you have coming in? You had up day. You had 2 days over the Bollinger Band, huge outside day down today to get back within it. Have you done damage to the chart? No. Did you have a bullish crossover the other day where the 18-day average got over the 200? Absolutely you did. So you put that all together and you say to yourself, oh, wait a minute here, that's pretty strong. That's the strength that I want to see for new highs. And you certainly made the new high today before the market reversed. That's all that it owed. I think you'll see that the 2180 to 70 level, 2170, the 200 and the 18-day average is going to try to be the support zone if the market can get there. And as it's breaking, it's getting away from being overbought. You don't have readings over 70 anymore. When we step over to the next chart, which is copper, didn't quite get up to the resistance. I was hoping it would. But you're not trending either. You've had a lower and low, higher high. I'm not blind. I can see how the market moved up. And this was off the idea of the COVID zero tolerance policy being relaxed in China. And they've been doing that. But now that they're doing it, the market's up. You got to pull back a little bit. Got to be fearful and listen to the marketplace, as I think our Fed is not happy. I think they're real unhappy that all the data, be it the jobs and these other reports, continue to come out as strong as they are. They'll say, well, the lagged effect hasn't hit, something hasn't hit. I'm warning you, you might get another hike in that interest rate. Why not? I don't see what's against it. When we come to the platinum, you had gotten up to the upper Bollinger Band, and that's where the markets typically stop. Lower bands, upper bands, the first challenge of them. Can they go further? Well, you did it right here. There's nothing wrong with that. And often it's accompanied if you embed, but once you lose that embedded reading, the whole game changes. And again, that's in the enhanced Bollinger Band course. In the palladium market, we're just void of a trend. The market's just playing games here between hitting the resistance of the 18-day average, breaking down, but not enough to get down to the lower Bollinger Band. It's also not in a trend, just wandering, as I call it. Last in the dollar. You got down 3 days ago for the first time to the 100-day average. This is for that gentleman that said, I'm saying this wrong, to the 200-day average. Here's where the market was the resistance on the other spot. And here's what I think he was saying, that it didn't pay attention. And I agree with there. But on this chart, there's many charts. Now, the first support should have been the 200-day average. I got my grammar right. Down to the lower Bollinger Band. And you're flipping back up. You're an oversold market that can bounce. Why not bounce between here and maybe even up to the 18-day average one more time? That can easily take place. So again, if you're interested in taking part of our end of the year sale on this, our Cyber Week sale, as I want to call it, just move your cursor up here at midnight Chicago time. That's Central Time. The sale ends. So if you're somewhere else in the world and you're seeing these videos, you missed it. It's been on every day for a week. Sorry about it. No, I'm not going to honor it. I'm Ira. You have a good day, and I will talk to you all tomorrow. Take care.